up the latest housing market numbers for March, which reflect the previous month's real estate activity across Texas and here in San Antonio. I'm Missy Stagers, owner, broker of MStagersRealtyPartners, and each month I like to share a quick update so you can stay informed about what's happening in our local housing market. And I have my lending partner, Jen Bailey, here sharing her insights with you too. So I sound and look like this due to the current market. Not really, but it feels like it. I've been sick. Depending on what goes on in the news, we are going to have some peaks and valleys again. So let's get started. Texas markets overview. Across Texas, there were 21,425 total home sales, which is about 2% decrease compared to this time last year. The average home price reached $415,871, reflecting a 1.6% increase year over year, which is always kind of interesting, you know. The statewide median home price came in at $329,200, which has remained relatively steady overall. When we look at some of the larger Texas markets, we continue to see some differences in the pricing. In Travis County, the median home price is $522,500. In Dallas County, it's at $370,000. Harris County is $307,990, and here in Bexar County, the median home price is $286,000, which keeps San Antonio positioned as still one of the more affordable major markets in the state. I know it's kind of hard to believe in today's market. We don't feel that way. But San Antonio's market updates, so here we go. Looking specifically at the San Antonio market, there were 2,363 home sales in February, which is about 7% fewer than last year. And I know a lot of us are feeling that. At the same time, home values here are locally remaining steady. There is definitely negotiate going on, and builders are at the top of the list for let's make a deal. The average home price reached $360,124, and the median price increased to $299,900. Homes are taking a little longer to sell right now, and winning the beauty contest, cannot stress that enough, is going to get your house sold while others don't. Buyers do not want to purchase a project on top of what it costs to buy today. The average days on market is around 102, which is 20% higher than this time last year. We're also seeing more inventory with about 5.5 months of supply, which means it's a balanced market, but buyers still have lots of choice, and plain simply, they'll just wait to buy. Overall, the market is continuing to shift toward a more balanced environment, but in this current economy, who knows? Of course, housing data is only one part of the story. What's happening with mortgage rates and lending can have a big impact on what buyers and sellers are experiencing in this market. So I've asked Jen to give you the mortgage update because what she has to tell you is going to reflect on what I've told you previously. Jen, take it away.
Thank you, Missy. So about right now, conventional loans are sitting at around 6.35, 6.4% for mortgage rates. And then government loans, FHA and VA, are about 5.9, 5.95. Now, over the last few weeks, we have seen rates worsened to about where they were 6 months ago. We had all this progress for 6 months, and then we backtracked a little bit. This is mainly because the financial markets are suddenly started to experience higher inflation and expecting the Fed to do fewer rate cuts. Investors started selling bonds, and markets became less confident that interest rates will fall soon. And also on top of that, global tensions pushed oil prices higher, and that can cause inflation. And higher inflation expectations usually means higher long-term interest rates like mortgages.
Yep.
And then the February producer price index came out, and it showed that headline inflation rose 0.7%, which was more than the 0.3% that we are expecting it to come out and show. And then year over year, It increased from 2.9 to 3.4, which the market was expecting it to remain at 2.9. So that was hotter than expected. Not helpful for interest rates. The Fed also had their meeting yesterday, or this week, and decided to keep the Fed's fund rate the same. And this response was more cautious and hawkish than markets expected. Not great for rates. Powell specifically pointed to inflation being above the target and being impacted by tariffs and rising oil prices. So since inflation isn't cooling fast enough, the Fed can't ease up yet and drop the Fed funds rate. Markets are now expecting only possibly one Fed rate cut in 2026. But again, this can adjust as things unfold in our economy throughout the year.
As we know,
As
it
we
can
know.
change quickly. It
Yeah.
can change constantly.
Yes.
Who knows?
Exactly. And the chart that you're going to see on the screen is showing the MBS market, and this is what drives mortgage rates and shows what they're actually doing. Green is good, red is bad for rates, and when it goes up, rates typically improve, and when it goes down on that chart, they typically get worse.
This is a really cool chart, guys.
Yes.
So take a look at it.
Yes, pay attention to that. And as you can see, they have worsened quite a bit over the past few weeks, but it started to take a turn back at the beginning of this week and then worsened a bit after the Fed meeting yesterday. So we shall see how things shake out. I'll always keep you posted. It's always helpful to hear what's happening on the lending side of the market as well.
And if you have any questions about buying, selling, financing, or any of those things, we are both here to help you all. We're always here to answer your questions and be of service. So thanks for joining us on this video.